everyone, how are you? This is Kay, good to see you, and welcome back to my another video on my YouTube channel. Today is Saturday on the 7th of December, and I will be sharing my trade performance in the month of November. So first, I will share the overall trades, how exactly which pair and which timings I took the entries and exits in the month of November, and also overall performance. Then later on, I will select one of my trades. I will explain how I enter exit one of my trades. So hopefully you enjoy the video and learn something new out of it. So first, let me switch the screen to Discord, where I post all my trades. So this is the Discord group of the KTS Academy. So in KTS Academy and also GTS class, I share my trades. So in the month of November 2024, I have been taking 4 trades in total, which is not a lot. So this is the spreadsheet I was talking about, and this spreadsheet is also available to KTS Academy and also the GTS members. But yeah, like you can see here down, I took 4 trades. So you see, for example, ADJPY twice because I take 2 entries at the same time. So 2 entries on each trade. So I took total of 8 entries and 8 exits, and I did it like 4 pairs. So first one, ADJPY, I took the trade on the 7th of November, and I bought at this price in lot size and price and pips to the stop loss and also the exit price. And I have also the win or loss break-even result and drawdown percentages also. So overall, I have a win rate of 37.5% overall, and PF was 3.63, so which was really actually not really bad. PF above 3 is the goal of my strategy, so I'm only looking at the PF part. And also R multiple is important. R multiple is the risk in the ratio overall in terms of pips in average, and PF profit factor is the risk and the reward ratio in terms of money value average. So every time I enter trades, I get 3.63 return per trade. So that was really good. So return was 2.0% because I wasn't able to capture big trend in the month of November, although I saw some, for example, JPY pairs are trending towards the end of November, but simply I wasn't there, and I wasn't able to capture the right entry timings, so simply I didn't take trades. And also I noticed that in the month of November, I really didn't see the trends in higher time frames. So most of my entries are based on, most of the pairs I selected were based on 4-hour time frame than the daily time frame. So that's why I took less number of trades and less return. But again, in terms of PF, which was great, 3.6, so I'm on the safer side. In this strategy, I will never lose in this way. And once I capture bigger pips like in the months of October or September, then I can make profits. So it just happened that the month of November, I couldn't capture trends, and that's why this was my result. So and again, here is my trade performance, and today let me select ADJPY, the first trade, how I took the entry and exit. And for the rest of the entry exit explanation in deeper level, I will do so in the KTS Academy and also GTS members. So you can expect another video for the members. So again, ADJPY was my first trade I took in the month of November and 7th. Entry was on 102.336 with a stop loss of 46 pips. trend capture by daily in 1 hour, and entry confirmation with gold cross and band walk and the trend line bounce. So if you have been following me quite some time, then you know exactly what steps I take to look for the entry timings, or exactly based on which logics I select the pair to trade. So, and if you're new to my YouTube, then please come to my website, and there is a free KTS course, and I put the link also in below the description, so you can take the free course first. Then I have 6 videos there. You can watch all the videos, and you will understand exactly how I built my own strategy, and based on what reasons I exit my trades. So after you check the free KTS course, then watch this video, then I'm sure you will have better understanding of how I describe my trades. So I took that trade based on the daily and 1 hour time frames, which were bullish, both time frames. So here is a screenshot of the daily time frame. I liked this market because Kumo was thicker and bigger and up. Kumo thickness is really important. And also Kijun Sen was up, and the market has been supported by the Kijun Sen here, and also it broke the resistance level. So based on these reasons, I selected this market to trade. So this was the breakout entry strategy, and this is the daily time frame. But just because daily is up, I don't enter trade. I also go down to 1 hour time frame, which I called the verification or confirmation phase. So in 1 hour time frame also, I found the market is bullish, like this way. So Kumo is also getting thicker and bigger. Before, Kumo was really thin, so it was overbought here, and that's why the market retraced to the Tenkan-sen. Then Tenkan-sen bounce happened, and the Kumo gets thicker and bigger. So that was better entry timing for me. And after seeing this, I go to the 5-minute time frame, and this is how I entered my trade. So again, I do analyze the market from higher time frames, then break down to the lower time frames and capture the exact entry spot. And I do so in 5-minute time frame in this trade. I also take 15-minute time frame too for the entry, but in this particular trade I took 5-minute time frame to enter the market. So 5-minute time frame shows there was a band walking, and the market was going up through the Bollinger Bands, and the trend line bounce happened, and there was gold cross on stochastic here too. So I got multiple reasons for the entries. If I have no reasons or no signs of the bullishness on the 5-minute time frame, then I don't enter trade simply. I monitor and see M5 goes bullish and see if I can find some entry confirmations, then I enter trade. Otherwise, the market retraces, and it just happens, and the market just goes bearish after that. So if you enter trade when the 5-minute time frame or the 15-minute time frame goes bearish, you may lose, and you don't want to enter trade on those timings. And that's the reason why I look for the entry edge on the lower time frames like this, which I found. So this was my entry, and after that what happened was that the market retraced. It didn't go up actually, unfortunately, and the market just retraced. But just because the market goes down, I don't exit immediately. I wait for, in this case, I waited for the trend line breakout as one of the exit confirmations. So then I exited right here, 102.18. I could have monitored more, longer time, to see if the market goes up or not. But one of the things that's important is to keep the losses small. So I forgot to tell you, but this is my stop loss, 46 pips of stop loss I took. So this one, 101.878 is my stop loss, and my entry was 102.336. I bought the market in this price level. And to the stop loss, I take 2% risk per trade. So that means if you have, let's say, $10,000, then the risk 2% will be $200. So if the market goes down all the way to the stop loss, then you lose $200 if your account is $10,000. And that's how I risk manage my trade. So the worst case scenario for me is the drawdown of the 2%. In case if anything happens, any big surprise happen in the market, which can happen anytime, then the market may spike down all the way and I may lose 2%. So 2% is my worst case scenario, but most of the time, I exit the trade manually before the price hit the stop loss like this way. So in this trade, I saw the market is going down a little bit, then it broke the trend line and I got other exit confirmations, which I call the invalidations. So then I exit my trade manually here, exactly on this level. So the most important thing is to minimize your drawdown before you try to make profits. And this was one of my biggest aha moment. Once I started to be profitable, I was always aiming to make more profits, and I was looking for the strategy to give me the correct signs to make profits, which I think almost everybody go through the first stage. But then I realized that no matter which strategy I use, I can lose, I can win, break even, and it becomes kind of random. When the market's trending, then I was able to make profits, but when the market started to range or when the market started to retrace, then my drawdowns became very big. So as a result, my profits could be big also, but my drawdown at the same time can be big, and that's why overall performance, monthly or half-year performance, yearly performance was break even or losses. So I was thinking how to avoid this kind of dilemma. I got the signals right, but my exit are oftentimes too late. I exit the stop loss, or my leverage was too high to enter trades. So either way, I found my exits were too late when the market started to retrace against me. And based on that logic, I do put the stop loss because anything can happen in the market, and this is my worst case scenario to have a 2% drawdown. But again, I built my strategy to exit before the price hit the stop loss with logics behind, which I called invalidation of my entries. So I exit here, and that's why the drawdown of my trade, the very first trade of my drawdown was very small. So that was, hold on. So like I mentioned here, the drawdown was 0.4% times 2. So in total, I took the drawdown of 0.8%. So that's why the drawdown can be very small, but when I make profits, then those profits can cover these small losses. And I found that's the easiest way to make profits over time. And this was again one of the biggest aha moments for me, to minimize the drawdown so that I can really stabilize my profits over time. So in the month of November, I took only 4 trades, and unfortunately I wasn't able to capture bigger pips. And that's why my return was 2.0%. But again, what I'm looking at is a PF. PF is the most important for me. If I have PF of 3 or above, then that means you never lose. At least you get returns every month, every week, or every year. So you can save the profits. Then with that much of profit, let's say 2% profit you have made in the month of November, then you add the 2% to the next month's trade, then you get more profits over time. That way you can compound the profits, and that's the strategy in the long term to really grow your asset over time. So if you have not paid attention to the PF yet, please do. You can check the PF in the broker's performance Excel spreadsheet, or even when you backtest by the Forex tester or TradingView bar replay, you can backtest on it, and you can check the profit factor number too. So try to achieve the profit factor of 3 or above, then you should be safe. Even if your win rate is 20%, you can still make profits, and that's really amazing strategy. So even if you have drawdowns, even if you have losses, you start to feel more easier in psychology, because if you capture bigger pips of profits, which happens, then you will make profits in overtime total. So yeah, that was my trade performance in the month of November, and some important idea about the risk management. So yeah, please also look back your trades in the month of November. If you haven't yet, then there must be always something to learn based on your trades. So, and check how many percent drawdown you had overall in the month of November. I have been thinking which one is more difficult to do, either to grow profits, to take, let's say, 100 pips of profit, versus to exit with smaller drawdowns like 10 pips or 20 pips, or percentage wise, let's say 1% drawdown. Which one is easier to achieve? And exiting by 1% drawdown is much easier than aiming for 100 pips every time you enter trades. So in this way, you can again minimize the drawdown. Then you can raise the PF higher. Then you get the returns automatically. So especially if you are also using the trend follow strategy, this concept really works. So please try and try to improve your trades over time in this idea and logics behind. So again, if you haven't checked the free KTS course, please do. It's again, I have 6 or 7 videos total, and I have explained all my concept of my strategy, KTS, and also entry exit logics behind, risk management, psychology also. And if you're interested, please feel free to join the KTS Academy, which is a monthly subscription, or the GTS class, which starts in next January 2025. This is a 3 months hands-on program, so that you can really master my strategy and my money management and psychology management skills. So I hope you have a great weekend, and hope to see you again soon. So until I see you next time, please stay healthy, stay safe, and stay gold. Bye for now. Mata ne. Thank you very much.